Hey guys, this is Vic from Grasping the Market and welcome to our morning briefing. It's Friday, May 3rd, 6:33 a.m. So let's get cracking. Although the longer time frame remains unchanged, we came within 8 ticks of touching last week's low here, and we had a very mechanical rejection of the 2900 area, which is a very important reference to the downside. On the daily, we see clearly how we continue the post-FOMC selling, putting an end to the recent trend up. But now the 2900 area has been already tested 5 times after the break we saw on April 12th. So it is now definitely the most important reference to the downside. Zooming into the market profile, we see how the early session seems to have been driven by perhaps short covering, judged by the prompt rally, and after the late sell-off. It's not uncommon that the market could have been a little bit short, and we have an immediate reaction at the open, and we push up. Now, the lack of continuation above the overnight high, which was over here, suggests that that was it to the upside, leaving untouched a considerable amount of single prints from the previous session. But when this happens, when covering is out of the way, that's the primary objective. Covering out of the way, then the market resume its course and continue to the downside, extending lower and building value down there. As expected, now the 2900. Yes, it is an important reference, and fast traders and buyers were attracted to respond there, and they left a very questionable low, which was only 4 ticks from the exact 2900 and 8 ticks from the previous low that we have marked there at 28.99. So the immediate focus for the morning is on value developing relative to this session that we have yesterday. If we build value and acceptance below 2900, that would be the most negative scenario, and that would increase the odds of further downside towards perhaps the next reference, which is over here, 2877 area. Now, if we have acceptance above the afternoon high, which is here, the 2990, 2920, 50, if we start getting to the acceptance here, that will increase the odds of stopping the downward auction, at least temporarily. And be careful, because remember that we have unfinished business to the upside near the year highs and the all-time highs. So we need to pay attention to that, because if we start building acceptance over here and we start pushing up value over here, what will happen is that we will have a daily excess confirmed. Well, it will be confirmed once we start moving up, but a potential daily excess here, which could prompt the market to another push to the highs. But remember, anything can happen, as odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.